Good morning. Hey, I'm Pete Purko. Welcome to Fri-YAY Facts. Fri-YAY Facts. I'm a licensed realtor, Georgia, South Carolina, Florida. We are the Purko team. I'm going to start by introducing Lauren Penner. She's a licensed assistant in Georgia, South Carolina, and Florida. So tell us about yourself.
Alrighty. I'm Lauren, as Pete said. I'm licensed in Georgia, South Carolina, and Florida as well. I am a mom of an 8-year-old boy. I'm a dog mom. I started real estate with Pete about a year ago, December, I think, of 2018.
What made you get in real estate?
Buying a house from Pete.
The process was that easy.
Yeah, I bought a house with Pete as our agent, and the process was so easy, smooth, enjoyable, that I was in nursing school, and I quit nursing school to get my license and join the Purko team. So him and his wife were great. Our sons played baseball together, so I would sit in the bleachers with his wife, not even knowing that it was my agent's wife, and they were always so friendly and nice, so it was a good experience.
Wife's Kelly Purko. She's on the team. She's licensed in Georgia, South Carolina, and Florida as well. We have a 1-year-old, so she stays pretty occupied with her. We also have an 8 and 11-year-old, and she's at home a lot with them. She homeschools, so her time is she's not readily available like we are. So back to Lauren. So let's see what else we can talk about. Tell us what some of your hobbies are.
I'm a very big people person. I like being around people, so I like going to social events. I like taking my son to the park. Again, I'm a dog mom, so we go to the dog park a lot. We do dog birthday parties. My friends have some of those going on. But yeah, so.
That's awesome. So Lauren, tell us what your contact information is.
My phone number is 706-461-7973. And my email is my last name, Pinter, Lauren@gmail.com.
Okay, so she is my licensed assistant, but if you need anything real estate related, you can call her directly or email you, and she will be readily and happily available to assist you. So now we're going to move on to Macy. This is Macy Risner. She is licensed. She is a licensed assistant as well. She handles all our marketing, a lot of our admin. She is licensed in Georgia and South Carolina as a realtor, so she can assist. She's accessible at any time. So go in, tell us a little about yourself, give us your contact information, and we'll go from there.
My contact information will be below. My phone number is 706-495-7311, and my email will be displayed as well. So like Pete said, my name's Macy. I'm a licensed assistant for the Purko team in Georgia and South Carolina. This year I'm starting my senior year at Augusta University, so I'm still in school as well. I have a lot of family up in North Georgia, so I like to go up there. We go on hikes, we go tubing. I like to do a lot of outdoorsy stuff up there. I've been in real estate for about 6 months now. I met Pete through his father-in-law, who used to always come to the movie theater that I worked at, so that's how I got into real estate.
She managed it.
I did.
Highly intellectual.
And I do enjoy doing a lot of the marketing stuff for our team. I like getting on Instagram, on Facebook, so check us out on those for sure.
Yeah, all that great stuff you see on there, that's her. That's definitely nobody else but her. All right, so you've been doing it for a little while now. Tell us what you like about it so far.
I'm just like Lauren and Pete, everybody in real estate. I'm a people person. I love talking to people, meeting new people, just kind of making more connections. I like that aspect of it. I like showing them different homes and watching them get excited about which house is the house for them to live in. I like to help people move into that next chapter in their lives. So that is something I really enjoy about real estate.
And building relationships.
Yes.
I mean, you hear it all the time. We actually love what we do. What we do every day is we know the American dream is for somebody to obtain that first home or that tangible investment. They want that tangible property, and they want to get out of renting or whatever the situation is. We love to see them actually achieve that goal. So it's fun. I mean, every day is a new day. Every day is a new challenge. Everybody has certain financial problems or financial obstacles they have to overcome, and we like having the assets and the connections and the pipeline to be able to assist them to achieve that goal. So it's a lot of fun. It's very rewarding, even though the steps from the contract to close are very rocky sometimes. Obviously, you don't see all the bad things, but when they sit down at that closing table and they actually sign that paperwork and they get those keys, it's nothing more rewarding and fulfilling than that, to see them so happy and so excited to actually call that place theirs, their home, and it's a great thing. So, like I said, you can call them, Lauren, Macy. Their contact information is here. Whatever you need, they can help. Obviously, you can call me. My contact information is here. I am the team leader. Like I said, we are always looking to recruit. We want to grow our team. So if you would like to join our team, call me at any time. I'd love to meet with you, talk to you, and go from there. We like to keep it real. We keep it fun. And we love our team. We love the environment that we're in, and it's a good thing. So anything else?
So we're going to start doing these videos weekly.
Yep.
This will be video one of many to come. So we're going to try and have different guests in here every week. So our first guest today will be Kerry King with Guild Mortgage, and she's going to answer some questions with Pete for you guys.
Perfect. Fri-YAY facts.
Fri-YAY facts.
We're going to get into the education. Special guest this morning. This is Kerry King with Guild Mortgage. She is a lender here locally. She's very good at what she does. She's very responsive, knowledgeable, experienced, and very professional. So we're going to do a Q&A and interview there. I know there's a lot of people out there that have a lot of interest in wanting to purchase a home, and they don't have the knowledge or the information to know what to do to achieve that goal. So I brought her in, that way I can ask her these questions that a lot of people want to know the answers to, and then you can hear it straight from her, and then you will know the answers, and then we can get you into that house, because the process is very easy. It's a great time to buy right now. The rates are really low, but I'll let her get into that information deeper, as she is the licensed professional. So again, this is Kerry King. Tell us about yourself and we'll go from there.
All right. Thank you for having me first.
Our pleasure.
Well, my name's Kerry King. Born and raised.
This is how you do it. This is how you would call her right here. Her contact information is here. And then
goodness.
She'll go from there.
All right. Born and raised in Augusta. Been here forever.
Forever. She's only 25.
Yeah, right. I have 2 children, 2 grown children, a 26-year-old and an 18-year-old. I've been doing mortgages for 7 years now, so learned a lot.
All with Guild?
No, I was with Wells Fargo prior, so learned a lot from there, and then, of course, with Guild. Love it with this company. It's
do what, 1 loan a month, maybe 2 loans a month, or how many loans do you do?
Last month I did 27.
27. So if she does 27 loans that last month, that means you probably know what you're doing a little bit.
A little bit,
okay.
yeah.
So, like I said, she's very professional, very experienced. So if you have any loan challenges, she would know how to overcome those.
Yes, most definitely.
All right,
Most
good.
definitely.
Obviously, with a loan lender, you want somebody who knows what they're doing and their experience. You don't want to go with somebody who's new or does minimal amount of loans, because then your problems may get pushed under the rug, or it may be a delay to get those answers, or your loan may not close. You won't get the clear to close because those lenders don't have the means or the knowledge to overcome those challenges, right?
Exactly. And
Okay.
being local too. I mean, you know where to reach me. It's here. I know sometimes people call the 1-800 numbers, and if you don't use me as somebody local, definitely use somebody that you can reach out to.
And she's very responsive. I've called Saturday evenings and she'll answer. I've called Sunday mornings, and nobody answers the phones usually on the weekend. She does. So that's definitely that's very invaluable there. So we'll get into these questions and we'll go from there. So,
All right.
question number 1. Do I need? All right. So I'm the consumer. And obviously everybody wants a house. Everybody's tired of renting. Who wants to rent? When you rent, you're throwing your money away. You can rent. I hear these stories from so many people that call us and they've rented for 10 years or 20 years or whatever the problem is. And at the end of the day, I don't understand why, because when you rent, that is a profitable business venture for another person. That person owns those rental properties because he is making income off of you. You are not only paying his mortgage off so he can own that one day free and clear, but you are paying the mortgage during the whole duration. So when you're renting, you are just throwing your money away. 20 years of hard work and you have nothing to show for it. So 20, 30 years, anything can happen. A medical something medically happened to you, you're disabled, handicapped, whatever, you can't work, you have no retirement, now you're homeless because you've been renting for 20 years.
Right.
When there's 15-year mortgages that you can own a house after 15 years,
Yes.
right?
Oh, yeah.
So when you own a house, the only thing you pay for are just the taxes, the insurance, and if there's any HOA dues, that's it, right?
Yep,
Okay,
that's
so
it. That's it.
like I said, if you're renting, this is a great video. It will be knowledgeable for you. If you do not own a house, this is a great video for you because you can own your house today. It's a very easy process. How long does the process normally take from start to finish?
Usually about 30 days, just depending on how quickly somebody needs to get in and out of the house. But we try to set it for 30 days so it could get everything that needs to be done without sliding in.
Wow. So 30 days, I could be Joe Smith renting an apartment, and in 30 days I can own a house.
Yes.
And it's mine.
Yes.
Oh, wow. 30 days. That's incredible.
Right. Yeah, you don't have to answer to a landlord or anything.
Nothing. I can paint my
It's
walls.
yours.
I can do whatever I want.
That's right.
Wow. I can put graffiti. I can put like sparkles in there. I can do whatever I want.
Whatever you want to.
Wow. Okay. That's exciting. All right. So, do I need great credit to buy a house?
Well, you definitely need to have good credit.
And what is good credit?
You could go as low as like 580 credit score. You really want to go higher.
Okay.
But people have life circumstances that have put them where their credit is bad, say medical bills or things like that. So that's things we could work with and work around. So a lot of times people think, oh my God, my credit's really bad, or then I can't get a loan. Well, I've helped a lot of families that thought that and helped them get a better credit score and gave them some tips, and I've got them into a home.
So I get obviously I'm on the real estate side. I'm the licensed realtor, so I'm the one meeting the clients, and this is where I learn their situation, the introduction, things like that. So they will ask me, what is credit? Tell us, what is credit?
Credit is basically anything that's, you've, like say, a credit card, mortgage, car payment, things like that. It's not, your car insurance or your utility bills. Rent is not credit. While we can use that as non-traditional credit, credit are things that are reporting to, the credit bureaus, and all that's weighed out to come up with a score based off how you pay things back. So, if you are paying things constantly late and you're trying to buy a house, it definitely does not look good because it looks like you're struggling already. So, a mortgage company is not going to want to give you a loan because they don't want that house. And if you look like a higher risk and you're paying things late, especially 30 days late, that's definitely something that they look negatively on.
So if you have bills, you basically need to try to pay them on time because these companies are reporting to the three major companies, Equifax, TransUnion, and Experian. So that's what accrues. They generate through an algorithm software to give you a credit score based on how quickly and promptly you pay your bills that are getting reported.
Correct.
So the big
balance too.
Okay.
So you want a revolving and installment, a good balance of those things. And if you have a revolving account, make sure you're keeping it, not maximizing your credit line and things like that.
Okay. And that goes more into like the debt to income ratios and all that. Okay. So the biggest thing with credit score is 580, you're saying, is the minimum.
Yes.
Okay, and up. What is a perfect credit score?
850.
Okay. And that's how they basically, that's
That's
higher
the-
than mine, that's for sure.
That's hard to get.
Yeah.
You know, you see a lot of 800s and things like that, but not, or maybe 830, but
All right, so number one, 580 minimum credit score. If you have a 580 or better credit score, you can qualify to buy a house. Now, I know a lot of things that I see are student loans and medical loans, so those do affect your credit score.
yes.
Okay, so you want to pay your medical bills and your student bills on time. At
Exactly.
least set up a payment plan so they're getting
Something.
reported that you're paying what you're
Exact-
supposed to monthly.
Right. I mean, agree to pay $5, whatever you have
Okay.
to, but you do not want it going into collections.
Perfect.
It will kill a credit score so fast.
All right. How much of a down payment do I need? And now, obviously, there's different loan types. So tell us what loan types there are and what kind of down payments we need for those certain types of loans.
Okay, all right. So, you know, there are programs that you could do 100% financing. You know, we do have a conventional 100%. But normally conventional, you want to put money down. FHA's 3.5%. USDA is 100% financing
Of the sales price.
of the sales price.
Okay, so if it's a VA, that's military, right?
VA is military. Everybody
Okay.
always asks, oh, what is a VA loan? So,
How do you qualify for a VA loan? What are the prerequisites that you have to have a VA loan?
Well, you have to be in the military or a veteran.
Okay.
Served in the military. So we have to run like certificate of eligibility just to make sure they're eligible for it. So if they're, say, in the reserves, they have to be in the reserves for like 6 years before, because there's the amount of hours.
Okay.
In the VA, I believe, I think as long as you're there like a year, then you're eligible. Maybe 6 months. I'll have to double check on that.
Okay.
But it's VA is 100% financing, also, you know, off the sales price. So there's so many different loan programs, and it's all based off, you know, your credit, your income, your job. You know, there's all kinds of different programs. So I tell people, you know, they'll call, well, what's my rate on this, or what is this? And, you know, it's kind of like going to the doctor. You know, you could call and go, oh my gosh, I've been sneezing, I'm sick, you know, what's wrong with me?
WebMD.
Yeah, you're right, you're right. What's wrong with me? Well, we don't know until you come in and, you know, get thoroughly checked out. So that's what I'm here for.
Yep.
Because people are like, oh, so I saw online there's this rate for, you know, 2.5%. You don't know all the, you know.
Until you see their personal information.
Right,
Okay.
exactly.
Yep.
You know, so every single file has, you know, something different about it, or their product, or, you know, whatever that might be. So that all those factors determine your rate. So your credit, your debt to income, the property type, because it could be, you know, manufactured home or a single family home, the loan amount, all those things combined, and it calculates a rate.
Gotcha. Okay, so you got the VA, which is 100% financing
Yes.
for military.
Mm-hmm.
You have a conventional, you said is 3.5% down?
Conventional is starts at 3.
3%.
FHA is 3.5 and up.
Okay, so if you go conventional, we'll use an even number, easy number, 100,000. So your down payment on conventional loan is 3,000.
Correct.
Okay, you have a FHA loan. That's the Federal Housing Authority loan, and that down payment is 3.5%.
Correct.
Okay, so that'd be $3,500 down payment on a $100,000 sales price.
Right.
All right, and then you have a the USDA loan. So I get people all the time, they want to know if they're not in the military. Obviously, $3,500 is a lot of money, so they don't have that money, but they still want to buy. So
Yep.
another 100% option is a USDA loan, which is in a rural area, correct?
That's correct.
Okay.
That's correct. So, and you have to, it is income limits too. So you have property, you have to have, the property has to be eligible, and you have to be eligible for that program. So, and it's a household income. So there's a lot of moving pieces, but again, it's something that we can check on for them instead of them finding that great home that they want and then find out they don't really qualify for it. It's kind of, that's the best thing about getting pre-approved instead of getting your hopes that I know I don't want to go look at something
Yeah.
knowing I don't know if I could buy it or not.
That's
you know?
right.
So
All right, so the USDA, that's 100%. So if the sales price is 100,000, then obviously it's $0 down. Same with the VA, $0 down. So my job is I meet with the consumer, or you, and we go look at the house. We find the house. how do I know what should they do first? I know there's a lot of pre-approvals and there's a lot of pre-qual letters out there. Tell us the difference between the two and what that means for that buyer.
Okay. All right. So a pre-qualification is, you've applied, we've taken all your information. Based off the information that you give us, we pre-qualify you off that. Then a pre-approval is when we get your documents, and that's what I try to do. I try to get their, pay stubs, tax returns, W-2s, just to verify it, because, some people don't really understand how they get paid, so they'll put in the wrong amount. So you think, oh yeah, you could be approved for this amount, and then when you get in there, that's not really the case. So a pre-approval is a little bit deeper. So we've checked their documents, we've done all that. The odds of you actually going through your mortgage process and getting approved are a lot better on a pre-approval versus a pre-qualification.
All right, so how long do I need to be at my job if I'm working for somebody and they take my taxes out of my check? How long is the standard?
I mean, if you've worked before, like say you worked one job and you want to go to another job, as long as it's really the same type of job, it's not good to change in the middle of it, but sometimes people have had to change, whatever, so you never know. And I've also had people that have just started like their job right out of, like they got their degree, in a particular field, and then they started their job, and we got them approved because we use their school as, basically a work history. So. Okay. It all depends on the situation. You've had a gap of employment, you need to be on there 6 months. So there's all those, depending, meeting the guidelines and what program you're in.
Because everybody's situation is different.
Exactly.
That's when you need to pre-screen them and look and see same with like self-employment maybe if you're self-employed. Because I'm sure that's a little more challenging.
Yes, and with that you would need 2 years self-employment.
Okay. All right, so you brought up a good point. So if somebody goes to school, they're out of school and they want a house, but they have no work history. What about medical? Do you offer anything for medical students? Like if they grad, like what kind of? Oh yeah. Is that 100% financing, or what kind of loans are?
No, we don't have the 100% financing, but we do have this 5% down. All we need is a job offer letter with no contingencies, basically. I finished medical school, I've been accepted to AU or MCG, whatever hospital down here, doctors.
Mm-hmm.
And my start date is, October 1st, and there's no contingencies, like you have to pass an exam or you have to pass a drug test or something like that. The letter has to be very like, you have this job and you're starting. No, if you pass the drug test,
Yep.
So, and then we've actually closed loans where people have not started working yet.
That's awesome. That's good to know for anybody in the medical field. Obviously, that takes a big relief off of them because they're incurring a lot of student loans. So
exactly. So they don't have to go rent first.
That's right.
And then they're stuck in a rental for a year.
Just wasting more money.
So they could just come out and.
So I come to see you. I want to get pre-approved. Or pre-qualified.
Mm-hmm.
Pre-approval is probably a better document to get because that means you have actually dug into their finances, checked their credit, like we talked about in the beginning, things like that.
Mm-hmm.
So what documentation, I know you spoke a little bit about it earlier, what documentation do I need to bring to you so I have all my I's dotted, my T's crossed, that way I'm fully prepared?
All right. So just the basic stuff is your last 2 years W-2s, tax returns, last 2 years tax returns, last 30 days pay stubs, last 2 months bank statements. And that pretty much could, real easy.
And a lot of that's PDF. You can just email it straight to you. Don't even have to come see you.
Go to your HR website.
Bam.
Save it as PDF, send it to me.
Finished.
Done. Yep.
It's too easy.
Yeah, and we just verify it and, okay, here you go.
Yep.
Pre-approval is nice for somebody, I found a house, but I need to make an offer right now.
Mm-hmm.
And, you say, Kerry, I just need, we check this out. So it gives like a basic overview, but there's always that contingency you guys give too.
I mean, as a buyer, you need to contact the lender first. If it's not Kerry, call somebody else. But if you're looking to buy or you have any interest in buying, you need to get pre-approved first. That is your necessary paperwork for any house you're looking at. It doesn't matter which area it's in. That is your proof that you are pre-approved and a qualified buyer to make an educated decision in purchasing a home. So if you are working with a realtor, preferably the Purko team, we would love to help you. But any house you look at, you need to have that documentation in place, because right now it's a seller's market. There is limited inventory out there, and homes are going very fast. I mean, extremely fast, 24 hours and less. If they're brand new to the market and the condition is good, meaning they look good, they're renovated, whatever the case may be, they usually don't last longer than 24 hours. The only reason if they are lasting longer than that is maybe the location or the condition of the home, or its price too high. But homes are going extremely fast, so you need that document. That way when you find that home and you're like, Pete, I love that home, that's the home I want, I can write that offer up, or Macy can write that offer up, or Lauren can write that offer up, and that offer goes out in 30 minutes. It takes no time. We send it to you, e-sign it, it's all done electronically, and then we send it to the other party, which is the listing agent on that home, and then they review it. Normally it takes 24 hours, and then it's under contract, and that's your house. And now you are going to be in contact with Kerry and her team, so they can go through the underwriting process to make sure all your finances are matching up with what you preliminary gave her in the beginning. That way in 30 days we can close on your property. So that pre-approval letter is a necessity. It's very important, because you don't want to go to that house and say, I love this house, this is the one I want, and then I look at you and say, all right, pre-approval letter, oh, I don't have that. And then it takes you 3 days, and guess what? If that was the house you had to have, it's gone in 3 days.
Yeah.
Because time is of the essence in this market that we're currently experiencing, because it is a seller's market, because the growth here is exponential.
Oh, yeah.
So
and a lot of sellers now, I heard, won't even let you, an agent, show a house without a pre-approval letter. Because, I mean, I know I wouldn't want just people in my home.
Window shopping.
Yeah, exactly.
Yeah.
I want somebody that, if I have my house up for sale, I would require somebody to have a pre-qualification letter.
Because they're walking through your house.
Exactly,
Yeah.
exactly.
And you really don't know who that person is. You just know who the realtor is.
Right.
So you're basically letting a stranger in your house.
Yeah.
And they can't even
Can't
qualify to buy
for
it.
it, to buy it anyway.
That's
so
right.
It's wasting everybody's time. Then you
That's
have to clean
right.
up your house. I don't
Correct.
want to do that.
All right. So, all that checks out. Now they want to know, obviously, say the VA loan works out for them. What are the differences between a fixed rate, an adjustable rate, and the duration or the terms of the loan, the length?
Okay. All right. So a fixed rate, whatever your rate is that you lock in or agree on, is for the entire term of your loan, which also you pick your term. I mean, you could do 10, 15, 20, 30 years. And so your principal and interest is fixed for that entire amount of time. If you keep it 30 years, that'll be it. Most people sell, 5 to 7 years.
Yeah.
So, that's where some people get the adjustable rate mortgage, because they know they're only going to be here 4 or 5 years, because it's a fixed lower rate for
Shorter term.
Yeah, like a five-year term. So, and then after, say,
Do you see that a lot, or do most people go with the fixed, the longer terms?
yeah, I mean, I haven't done any like adjustable rates.
Because the rates are really good right
rates
now.
are, yeah, exactly.
What is the rates currently?
Like a VA loan yesterday, I quoted one at 3.375.
That's low. So basically, somebody's borrowing hundreds of $1,000s for 3.3% interest.
Yeah, and
That's
tax
cheap.
deductible too. So
Wow.
yeah, So,
That's pretty low.
yeah. So again, based off credit, loan amount, all those kind of things.
Now, what if I'm a really strong qualified buyer, and 3.3 sounds good, but obviously people have phenomenal credit scores, or they make lots of money, so they want that rate to be lower. I know a lot of people ask me about discount points. Will you go into that, please?
Yes, discount points, you could buy your rate down, just depending on how low you want to get it. And it just depends on the dollar amount, you know, how much that rate costs. So if you want, you know, a 3% rate, you just ask how much would it cost me, and then go, okay, how long am I going to live there? Because how much difference really is it going to make in my payment? Because a lot of times it's not that much. People like, you know, they think, you know, oh, 3.5 or 3.65, you know, but I'm going to buy it down for, you know, a couple $1,000s. Yeah, it doesn't really make a lot of sense.
Over the duration.
Right, unless you're like, I know this is my lifetime home, I'm gonna live here forever, so long term, yeah, but if you're only gonna live there the normal 5 to 7 years, then sometimes it's not worth it, but we could always run those numbers.
But you'll crunch those numbers and let them know to make it, okay. That way they can make an educated decision.
Exactly.
What determines the mortgage payment? Like say they're gonna buy a $200,000 house, or we'll keep it easy, $100,000 house. What determines that monthly amount, and what are they paying for in that monthly amount?
Okay, so first you have your principal and interest, so whatever loan amount you get, you know, depending on.
And the principal, you mean the amount they're borrowing,
plus interest.
and then the interest on the percentage that you talked about, the 3.3 if they qualify. Okay.
Exactly. So that's your fixed amount. Then you have, depending on how much you put down, you may have mortgage insurance or private mortgage insurance that's required.
And talk about that. So that is on all loans, or what is that? Because people ask me that all the time. PMI, that stands for private mortgage insurance. Tell us about that.
It's on every single loan unless you put 20% down.
Unless you put 20% down. Okay. So 20% on 100,000 is 20,000. They would have to put down 20,000 to get rid of the private mortgage insurance.
Yes.
And that would leave them a balance that they're borrowing of 80,000.
Right.
Okay.
That's correct.
The private mortgage insurance, that is insurance basically when the housing crash occurred back in 2011-ish. That is on all loans. That's something they mandated to help protect the housing market, basically.
Exactly.
Okay. All right. So you got principal and interest. You got PMI, which is on 100,000. How much?
I have a sheet there too. Basically, I mean, if anybody wants any like information here too, it's just like basically mortgage insurance in a
Talks
nutshell.
about all that. So that's inevitable. I know a lot of people are like, what is this PMI? But that's inevitable unless you put down 20%.
Right. Now we do have, you know, a program that does not require mortgage insurance, but your credit score has to be really high, and their interest rate is higher than the normal, you know, one with this may be lower, so you're going to pay a little bit higher interest rate with no mortgage insurance. So I mean, that's a good product for some people, you know, because it's 100% financing.
Yeah. People love 100%.
Exactly.
100% means
and no
zero to them.
Exactly.
Yeah,
Exactly.
can't beat
And no mortgage insurance. So, but yes, it's definitely required. And then you have homeowners insurance.
Yep.
And I tell people it's kind of like a car. You have your car payment, but you also have car insurance. So you may have a $300 car payment, but you have $100 a month car insurance. So really your payment is $400.
That's right.
So
because you have to have the home insurance with the home.
Right,
Yep.
that's correct.
Okay.
So homeowners insurance is required, and property taxes. And what's happened in the past with the housing crash, or people walking away from homes, they would not pay their property taxes. So in turn, the mortgage companies had to pay back taxes and things like that. So now it's required to be escrowed. Homeowners insurance people, you know, when it wasn't escrowed, maybe they didn't pay it and their house burned down.
And escrow means it's an account. It's basically an account where they, out of the mortgage payment you make monthly, they take out that portion, and obviously you know what the total is because your lender has discussed this in detail with you prior to going to the closing table where you sign the necessary paperwork to own the home. But escrow is where out of your monthly payment, they have a set amount they take out of every payment to put into that escrow, which pays your taxes and insurance on your behalf.
Exactly.
So it's not like they're making multiple payments every month. They make one total,
Right.
and then those amounts are
Right,
properly.
so whatever your annual property taxes are and your annual homeowner's insurance, they take those numbers, divide it by 12,
Okay.
and add it to your monthly payment. So every time you make your payment, your principal and interest goes to where it goes, and then the other goes into your escrow account, kind of like a savings account. That way, when you get that property bill in, and you're like, oh my gosh, I owe $2,500, you really don't have to pay it because it's part of your escrow.
That's perfect.
So you don't have to worry about saving it.
Yep.
The mortgage company is saving it for you.
That's
to
good.
pay
Because
out.
I know me, if I have extra money, I like to spend it. So
See, me too.
I don't want
Me
to
too.
get
It's
to
so
the
funny
end
because
of,
people
yeah.
are like, oh, so you're just going to keep my money and make interest off of it. I'm like, I don't know about you, but my savings account would, if it had $2,500
It's
in
gone.
it, make $2.
Yeah, with kids
So
and everything
it's
else
worth
I have,
somebody
yeah.
paying the bill for
Absolutely.
me. So.
That way because obviously you want to pay your bills on time because then it affects your credit score like we talked about earlier. Are there programs for first-time home buyers? Because I get that a lot, and that's, what we spoke about earlier, but I know a lot of people are very scared because they've never owned that home, so I get that all the time. Are there programs for first-time home buyers? Because they may not want to go out USDA where it's rural outside of the city city limits and live way out in Appleton or Harlem or North Augusta. They want to live right here in Martinez, but they're a first-time home buyer. So what kind of programs do they have for them, or even like EMS or first responders or teachers?
Right. So you're talking about like besides FHA,
Yep,
where
like,
you
I know
don't have the down payment and something like that. I mean, there's Georgia Dream.
Okay. And what is that?
It's again income based.
Okay.
So I mean, if
Like you can't make over a certain amount of money?
Exactly.
Okay, gotcha.
It's usually depending. Well, I know Georgia Dream's a little bit lower, but a lot of programs are like based off the median income for the area.
Okay.
Around here, it's sort of like around $63,000.
Okay.
But Georgia Dream, I know, is lower than that. So it's basically for families who want to own their own home, but don't have the income or the resources to get it. So there are programs to help. Like Augusta Richmond County has, city funds. Georgia Dream, South Carolina has several programs, that help out, pay the down payment.
Do they have to pay that back, or is that a grant given to them?
It's a grant given to them on most of them, but there's a time frame.
Okay.
So if you get that down payment, it's usually like forgiven after so much time. Some are 7 years, some are 10 years, some are 20 years. So it's based off the program. So there's no just like blanket,
They don't want you to buy the house and then sell it, and then you got
right,
I
exactly.
understand.
I mean, which makes sense.
Yeah.
If they're giving you that money. So, but say you do need to sell it, all you got to do is that money will be netted out of your proceeds.
Wow.
So you just pay back the program that gave you the money if you don't meet the
Fulfill the term. Gotcha.
Exactly.
All right. So that's all I have. That was very educational, very in-depth, and we're very grateful for you giving us that information. Is there anything else you want to add to that, or talk about any specific program that Guild has, or anything that makes Guild better, or anything you want to close us with? I know you provided all these documents here. There's lots of documents. Obviously, if you're looking to buy a home, it is overwhelming, but she has all this paperwork that looks like a really good guideline that can help you stay educated and provide you all the necessary information you need to move in the right direction. So if you want to close us out and go from there.
Well, definitely thank you guys for having me. Guild, I think the difference with Guild is, we service our own loans, so we keep our loans. The process is always, has a lot of anxiety anyway. So this makes it makes it a lot better. They've been around since 1960.
Oh wow.
Yes.
1960. So you're 59 years.
Yeah.
Oh wow.
Mm-hmm. I mean, it's a great, solid company. I think, for me, I like to give, good service, communication.
Service is 5-star. Great service.
So, that's, I'm going to do what's right. I tell everybody when I sit down with them or when I pre-approve them, I think, okay, if this was me in that situation, what would I want for myself? And then I start there and then give them some options. Every single person to me, I'm going to give my all for everybody, and it doesn't matter because, they want that to have that dream.
Oh yeah, absolutely.
So I want to help them.
It's the largest investment of their life.
Yes.
So it's very, and for
huge.
them, and that goes back to a good point. So if they're looking to meet with you, and obviously they don't know the proper procedure, but now we have educated them with this Fri-YAY Facts, which we're going to start doing weekly. What does it cost to contact you or have a consultation with you, or for you to look into their finances or go from there?
Nothing.
Nothing. Zero.
Zero. And I think that's a lot of times people don't.
That's huge.
They're
So
scared
they
to
can
come. They
they
think
can
that
start
there's a
the
cost.
procedure with you, and you will put them on the proper path. Talk to them about their finances, how either they are approved or what they can do better, or what loan is best for them, and all that's free.
Yes. All that's free.
Zero.
Zero.
You can't beat that.
Exactly.
Who doesn't like free?
Yeah, and also a lot of times people, they have gone like maybe to another lender or something, and they were told they were not qualified. It's always good to talk to a couple of people.
Absolutely.
And I tell people too, I'm like, go talk to somebody else too. You know what I mean? Because I want them to feel good with making the decision coming to me.
Correct.
You know, so, I mean, because it's one of the biggest things you do in your life.
Yeah.
That's
I don't spend hundreds of thousands
have
of
kids,
dollars daily.
get
so.
married, and buy a home.
That's right.
Yeah,
That's
so
huge.
Anyway, but I look forward to continue working with you guys.
Well, it's been a pleasure. We've closed a lot of deals with you. We're grateful to have you as a partner. Your company's great. You're phenomenal as a loan officer. And like I said, if you need to call Kerry, this is her contact information here. You can call her directly on her cell phone, her office number, or reach her via email.
Yes.
She has a team. How many assistants do you have?
I have 2 assistants.
Okay, so she has 2 assistants. That means she will get back to you promptly. I know there's a lot of larger companies out there that are nationwide, but like she was talking about earlier, everybody likes answers fast. I know I do. So when you call her, you can expect to get an answer fast. Whereas if you call some of these larger nationwide companies, it may be 2 or 3 days before you hear back from them. So if you're hearing back from them 2 or 3 days back as the consumer, imagine what your realtor is having to go through to get an answer. So it complicates everything.
Yeah.
So local, if you can, is always preferred, but obviously that's a decision you have to make. So again, I'm Pete Purko, the Purko team. I'm with Summer House Realty. We are excited, and we look forward to being able to assist you in the future. So again, thank you, and
Thank you.
have a good day.
Thank you.